Hey y'all, Zach with Real Property Associates here. Excited to share July's monthly market update with you. A couple things really quick. About to head off on vacation with the family for a few days to Chelan, so wanted to get you this video before we took off. I'm sitting at Starbucks here, so I apologize if any of the noise in the background is being picked up. But let's jump into the stats here. So the city of Seattle set a new median record sales price again, I think 4 months, 5 months, I'm starting to lose track now. $735 is the new median sales price record in the city of Seattle, and that's up 13.1% over this time last year. Shoreline saw $557, Edmonds $617, and Linwood $482. All of those are up more than 12% over this time last year. So we're seeing price increases in the city of Seattle, but all the suburbs right around it are going to keep track. Average percent of list price, this is the amount that homes are selling over the asking price. Seattle, 107.7%, it's almost 108% of the asking price, so 8% over. Shoreline's over 10% over the asking price on average. Edmonds, 3.5% over the asking price, and then the city of Linwood is a little over 4% over the asking price. So in all, the average home that you're trying to buy is going to sell for more than 3 to 4% over the asking price. And if you're in Seattle or Shoreline, you're going to see those prices even higher. Now, there are some homes that are overpriced, and those will sit for longer periods of time, which actually skewed this average a little bit. But a hot house, one that is desirable to everybody, those homes are selling even sometimes 10, 15, 20% over asking price. So we haven't seen any slowdown there. Median days on market, we're still looking at similar numbers. Seattle 7 days, Shoreline 7 days, Edmonds 8 days, and Linwood 6 days. So, and again, those are artificially inflated. Those would be shorter, I think, if there weren't offer review dates where the seller takes a week long to review offers and pick from the best. If they just took the first offer, I think we'd even see lower times here. And the biggest reason is just supply, and we've talked about this before. We're under a month of supply in Seattle, and Shoreline, Edmonds, Linwood were just over a month of supply, which is really low. So what that means is if all the homes sold that were on the market and no new ones came on, we run out by this time next month. So super high demand as well, and that's really what's driving these price increases, and I think we're going to see that for a while. And things to keep an eye on, I like to point this out as well. Seattle just passed an income tax law that's going to tax people that make, individuals that make over $250,000, and then married couples filing jointly that make over $500,000. They're going to be taxed 2.25% income tax. Now, this tax is most surely going to be sued. I think the city of Seattle is going to be getting sued here, and the big reason is because income taxes are actually illegal in the state of Washington. So we'll see if this actually plays out, but even if it does, I don't really think it's going to have much of a bearing on the real estate market. And first of all, it's not that burdensome as far as their purchasing power for people that do make those amounts of money, and then for the majority of people that they're not going to be affected by this income tax. So it's not, I don't think, going to have much of a bearing on the market if it even is able to be enforced. The second thing to keep an eye on is the continued population growth in the city of Seattle. Fastest growing city and the big city in the country for the second time this decade, from July 1, 2015 to July 1, 2016. There was a net gain of 21,000 people, and that was a 3.1% population growth, largest by far of any of the major cities. Since the beginning of the decade, we've seen about 15,658 people a year coming to the city of Seattle. And these are all stats from U.S. Census Bureau that were re-quoted in the Seattle Times. And then interesting, I saw this in an article from Cairo. The Office of Financial Management just released this, and this is actually more recent stats. The state of Washington now has 7.3 million people, and the city of Seattle is now up to 713,700. So that's even more than what these stats from the Census Bureau are. And they're quoting that 74 new people are moving to Seattle on average, net, every single day. So we're going to keep seeing this. I think we're going to see it for the next while here, and expect that as the population keeps growing and if the supply inventory doesn't increase, we're going to keep seeing these price increases. And the last thing to keep an eye on is development in the city core, and I think this speaks to how healthy the economy is here in Seattle. Lots of investment, this is local and foreign investment into the city of Seattle infrastructure. We have 58 construction cranes in the city, which is 60% more than any other major city, actually any other city in general. And there are currently 50 major projects scheduled for the rest of the year, and then another 99 that are scheduled for upcoming years. So it's not just right now, it's actually a future pipeline as well. It's looking good, and a lot of people are really investing in the city of Seattle. And again, this is local and also outside money coming in. So in general, I think we're looking, and from everything that we can see and everything that I hear as well from people that I follow, we really are a healthy real estate market, and I think this is going to continue. These price increases and growth is going to continue for at least the next few years. And I've been saying this for a while, but I just want to repeat that. And I think the biggest takeaway from all of this is that right now, if you're thinking about being a move-up buyer, which means you're thinking about selling and buying something else, I think this is the time to do that. And a couple of reasons. First, you're able to take the equity and become the seller in a hot market. So you can take the equity out of your house, reinvest it into a purchase now, and you would think, man, I'm buying an expensive house, and that's true, but you're actually essentially buying at whatever price point you bought at before. So if you bought a house in 2010, you're essentially taking all that equity you've made and then reinvesting it, and you're buying a house now at a 2010 price. And then if we keep seeing this for the next few years, which I think we really will, you're also able to get equity in that new house as well. So I think this makes now an ideal time to be a move-up buyer, and I think you have a couple-year window here, which then really bodes well for you as the buyer. Now, again, all this is barring any kind of major catastrophe that's unforeseeable, but from what's foreseeable, Seattle, and I'll talk about this more in some videos coming up, I really don't think Seattle's in a bubble, and that's because we have a healthy economy, number one. Locally, we have great job growth, we have lots of population influx, and we also have buyers that are actually qualified to be purchasing the home, so the lending climate is actually healthy as well. So we'll talk about that more in another video. I wanted to get this to you. Have a great month of July, and if you guys have any questions or you want to bounce ideas off me, love to hear from you. Until next time, bye for now.